Folks, today I'm going to talk about two, not one, but two large cap tech stocks. I know you're probably thinking to yourself, Roger, you've crucified us from trading these large cap tech stocks. But yes, I'm actually going to give you two large cap techs that are bucking the trend and are actually looking pretty darn good. So over the past several months, the large cap tech sector has been largely lagging behind the overall stock market. And as most of you know who've been following me, I've been increasingly critical of large cap tech and consumer discretionary stocks, but it's not always wise to throw out the baby with the bathwater, as you will see by this video. Sometimes we can utilize these scenarios to find stocks that are bucking the trend. First, let's start off with the QQQ and why it's having a difficult time outperforming the broad market at this time and for the last several months. The biggest reason for this is inflationary pressure, which tends to put the most pressure on large cap tech, since those stocks are expected to yield the most earnings per share profit due to their volatile nature and accumulation that's based on forward-looking potential instead of actual results like blue chip stocks or defensive stocks. While I've been super critical of the large cap QQQ sector as a whole, and currently momentum levels are confirming my view that the index as a whole needs to cool off before heating up again, I believe there's two stocks that are bucking the overall trend and appear to be ready for more upside gains in the near term, especially with their relative strength in relationship to other stocks within the QQQ. The lesson here is don't throw out the baby with the bathwater. There's always opportunity, and today I want to talk about two stocks that I really like within the QQQ right now. First one, Alphabet, ticker symbol GOOGL. Earnings per share came in at over $26 per share, well above its estimates of $15 plus per share. Operating income more than doubled. Sales were up 34% year over year to over $55 billion. YouTube grew around 50% in revenue year over year. Plus sales from Google Maps, Gmail were up 30% year over year. The company has been increasing its presence in the home assistant space. Google Home runs Google's new voice assistant, as voice is considered the next big thing in technology. Now, this certainly bodes well for the company's long-term prospects. The company's monopoly in online search isn't going away anywhere anytime soon, as Google sees an increase in search queries. Technically, the company continues to generate momentum and reach towards new highs. Now, momentum levels remain strong for a large cap with a one-year return of 66%, especially for a mature company. And I'm seeing more upside ahead. Price target of $2,450 next 12 weeks is very possible. Next stock on my list, Facebook. The company grew sales at 48% year over year, with advertising revenue comprising most of its growth. Facebook also generated 150% growth versus virtual reality. That's huge, and its e-commerce initiative. The company was also able to grow its global monthly active users count by over 8% to about 2.8 billion. Plus, another 500 million people visited Instagram and the WhatsApp app monthly. Those numbers are amazingly telling. And the stock has gained over 38% in the last 12 months, and I believe we're going to see higher momentum levels ahead. Earnings estimates and surprises are substantially better than expected, and we could see strong upside over the summer months. Profit target of $350 per share over the next 12 weeks is very possible, assuming momentum picks up once again in large cap tech and the QQQ begins trending, or at least remains at the current level and doesn't have a major sell-off, which is very possible during the summer months. Now, large hedge funds are liking these two stocks, but they're also liking a lot of other tech stocks that are not so hot. So for now, don't get too excited about large cap tech and stay within the bounds of Facebook and Google for the time being. We may have some more winners down the road, but for now, stay with the big boys and remain cautiously optimistic. Hope that helps. Folks, it took some major convincing, but Wall Street legend Chuck Hughes is finally pulling back the curtain behind his brand new triple threat strategy, and he wants everyday traders to follow along as he sets to quintuple, not double, triple, quadruple, quintuple. That's 500 times, 500% return. His trading account over the next 3 months. That's 12 weeks. So in other words, he's giving away his best kept insights and trades that he's never, ever, ever shared before. Don't waste another second. Make sure to click on the link below now to see the blueprint to all of Chuck's success, because this is something everyday traders like you cannot afford to miss. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when I post a new video for you.